Stablecoin settlement only works when money, token movement, and records stay aligned. In this module, we'll connect reserves, treasury operations, attestations, and reconciliation into one control architecture that supports liquidity, trust, auditability, and resilient regulated digital asset operations. You've already built the core stack: issuance platforms, token standards, smart contracts, and settlement mechanisms like DVP and atomic exchange. Now we shift from execution to control. The key question is whether reserves are funded, treasury movements are governed, and records are reconciled well enough to support real institutional trust. A stablecoin does not settle safely just because the token moves on-chain. Each issued token must stay aligned with eligible reserve assets, treasury cash movements, bank and custody accounts, and internal records. Treasury architecture governs how funds are received, invested, moved, and redeemed. Reconciliation checks whether on-chain supply matches off-chain reality. When these layers work together, the issuer reduces settlement risk, audit friction, and regulatory doubt. Think of reserve-backed settlement as 4 systems working as one. The blockchain records token supply, transfers, and mint or burn events. The financial layer holds reserves through banks, custodians, and ledgers. The control layer defines who can approve movements, reconcile balances, handle exceptions, and produce audit evidence. Integrations connect these layers through APIs, feeds, and reporting. The model works only when every token event can be traced to money movement and control evidence. Reserve design starts with a basic rule: customer backing assets must not mix with corporate money. Accounts can then be split by function, such as issuance, redemption, liquidity, fees, operations, and unsettled payments. Each account needs a clear owner, purpose, and control process. Local law determines titling, trust, or custody arrangements, and eligible assets. The goal is straightforward: every token liability should be traceable to sufficient, protected reserve assets. Reserve design is also about resilience. The issuer must decide which assets qualify, how quickly they can become cash, and what limits prevent hidden fragility. Cash and central bank balances provide the strongest buffer. Short-term securities or money market funds may add yield, but they need haircuts, maturity limits, and concentration controls. The system should value reserves daily, classify liquidity tiers, monitor data sources, and alert teams before redemptions or stress create a shortfall. Stablecoin supply should change only when cash and tokens move in sync. For minting, funds are received, bank settlement is confirmed, compliance clears the investor, treasury approves, and tokens are created and posted to the ledger. Redemption applies the same discipline in reverse: request, lock, or burn tokens, verify eligibility, approve payout, release fiat, and update reserves. Controls such as sanction screening, dual approval, allow listed wallets, and exception monitoring help prevent unbacked issuance, duplicate payouts, failed burns, and ledger mismatches. Treasury governance is where operational authority meets financial risk. Every fund movement, reserve adjustment, mint, redemption, or emergency liquidity action should pass through defined roles and enforceable approvals. Maker-checker flows, dual signatures, limits, escalation rules, and approval windows prevent one person from acting unchecked. Just as important, each decision must leave an audit trail that connects wallet policy, custody signing, bank entitlements, and internal finance controls. Stablecoin Treasury cannot operate as an isolated blockchain service. It must translate settlement events into the language of banks, custodians, fund administrators, ERPs, and reporting tools. Balances, approvals, statements, on-chain confirmations, and journal entries need common reference IDs and timestamps. Good integration design also assumes failure. Retries, idempotency, reconciliation keys, and exception queues prevent duplicate postings and make breaks visible before they affect reserves or financial reporting. Proof of reserves connects two very different evidence worlds. Token supply can be checked through contracts, balances, and mint or burn history. Reserves depend on banks, custodians, asset reports, and legal confirmations. The critical step is reconciliation. Using the same timestamp, a clear valuation method, defined liabilities, and disclosure of restrictions. A weak design may show assets while hiding encumbrances or obligations. A credible design proves coverage, scope, and data reliability together. Attestations are credible only when the underlying evidence is complete, traceable, and repeatable. A reserve report should tie back to bank statements, token supply snapshots, reconciliations, approvals, and blockchain events. Auditors will ask who approved actions, when they occurred, what changed, and whether exceptions were resolved. Evidence should be stored with timestamps, source IDs, hashes, and version history so internal teams, external auditors, regulators, and financial statement reviewers can rely on the same controlled record. Reserve reporting serves different audiences with different needs. Operators need live signals, supply, reserves, liquidity, redemption queues, exceptions, and feed health. Public reports need tighter scope, timestamps, and alignment with legal disclosures or attestations. Regulators may need deeper evidence, transaction history, asset composition, and control records. The pipeline matters as much as the dashboard. Validate inputs, track source lineage, show freshness, and restrict access so every number can be trusted. Reconciliation is the control that keeps every record of truth aligned. Smart contract events and indexer data are matched to the platform ledger for mints, burns, transfers, settlements, and fees. The ledger is then checked against bank statements and custody records for receipts, payouts, reserve movements, and balances. Accounting entries must reflect the same assets, liabilities, fees, and revenue. Strong matching uses amount, asset, wallet, counterparty, transaction ID, timestamp, status, and settlement date. Not every reconciliation break carries the same risk. Treat each exception as a controlled workflow, not just an inbox item. First, classify the break by financial value, customer impact, compliance exposure, and settlement risk. Then assign an owner, investigate root cause, attach evidence, approve the remediation, and record the closure reason. Mature teams track aging, break rates, false positives, unresolved value, and timeliness. This turns reconciliation from a detective exercise into a governed operating model. Stablecoin settlement becomes institution-ready when funding, governance, proof, and records operate together. Reserves must be segregated and liquid. Proof of reserves must connect tokens to reliable evidence. Reconciliation must align every on-chain and off-chain record. Next, we'll use these controls to choose the right settlement rail.